All right, Doc here from North America. Good morning, good afternoon, and good evening. It's another fun-filled day. Oh, no, it is not. It is Friday, so we've come down to the end of the road. Let's see what we have going on today. One of the big news stories I saw to start off with was the foreign ministry. You know, the foreign minister of the was it the Russian, what do they call it? The Russian Republic. You know, in other words, all the countries put together in like their federation, Russian Federation. That's it. The Russian Federation came out and said, "No way, we're invading Ukraine. You know, it's unthinkable." But here in the States, they just keep on beating the drum. I understand that Mr. Biden was on the phone with the president of Ukraine and tried to convince him that they're going to sack the Kiev. Just going to sack it. No stopping these guys. They just have a fantasy in their heads and they just don't let it go, and it just shakes everything up. And you can see the oil market. Well, here we have right up on the screen. You can see the Swiss this morning. The dollar is very strong still. I'm not sure if it's from the incompetency of the Federal Reserve over the last 2 days, or if it's I don't think it's really the war drums. I really don't. I really think it's just a combination of the craziness of our Federal Reserve. People have really been shaking their heads, not sure exactly now where they're going. And there's talk of 5 increases now. As we mentioned yesterday, the Federal Reserve kind of contradicted their own minutes, things that they had said they released in their minutes. And Chairman Powell had actually contradicted them and said, no, we never discussed them, and they weren't part of the process, when in fact, he himself in the minutes say that it is part of the process, and they talked about it and they explored it and so forth. So no wonder the markets seem to be losing a little confidence here. Now the strength we see in the markets overall is the end of the month, you know, where there's a concept of investing by professional investors and the financial industry in general. It's called dollar cost averaging. And what they do is they try to randomly buy in the last 3 or 4 days of the month, and they call that averaging in. And then they try to sometimes do it the first day or 2 of the month. And what we're seeing here is every time the markets get sold down, they kind of reach back for them again. I guess that's the best way. You know, they come in. There's buyers out there. You know, the type of thing. And so what we've been seeing is the bounce back up in the market. The Dow Jones Industrial Average right now is theoretically it's down about 300 points. I think physically, let's just take a quick look. Right there, it's down 288 points. Okay, so that's around about the fair value where it belongs when you compare it. And when I say that, you know, if you're wondering, what does he mean by fair value? What happens, imagine if you bought all the stocks in the index, okay, if you owned a basket of them, and then you looked at the premium of the futures contract, there's an actual fair value. In other words, it's a combination of interest and margin. In other words, the rate of the interest on buying them on margin, and you subtract out the dividend, and that defines fair value. So right now, fair value in Dow Jones Industrial Average right now they're saying it's opening down around it's about -$8, I guess it is. So fair value is almost right there. Fair value is like $301 exact. So that's where we are at the moment. That's pretty much the same thing. In other words, it's almost at fair value. The Dow is being down about 300 points. In that case, there you can see it's 282. You know, it's flopping around all different directions. Same thing with the Nasdaq. Was it the Tech 100 over here? You see that the fair value is about a -48. Over here, it's a minus. I think it's 36 or 34, right there. Let me see. The fair value, no, it's 31.5. Basically 32. So with it being -30. In essence, when you look at the fair value and then you see it trading at -30, but the fair value is minus 32. In essence, it's basically up 2 points. And now at 31, it's up only 1 point. That type of thing. That's how we figured out. And when you look at this, 301 is the fair value. Minus 301 is the fair value. It's trading at minus 292. So it's kind of, in a sense, up 9 points. And that's how we look at those things. All right. So let's get back to the currency. Let's take a look at because we've been really, we were really surprised. We really thought, we were in the weekly sell here on the Swiss for the last couple of weeks. It was down there on Monday looking fine. We're thinking it's going to go down to the bottom end of the range. We got a red. We're in a sell. And then the next day they give us a green. They give us a buy signal. And we start to see the weekly start to turn up. And see, that's Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so then the meeting, this is the day the meeting started with the Federal Reserve. This is the day, the next day is the day that they released their information. So obviously they leaked out some information because you can see the follow through as the meeting starts. They basically on Tuesday had decided what they wanted to say or what they were going to, report to the public. And so you can see on Wednesday, the market follows through with strength. And you can see right here, the Swiss now is, closed in a daily buy on Tuesday during the beginning of the meeting. They announced the meeting at 2 o'clock Eastern Standard Time the next day, so 24 hours later. But you can see that the buyers had been in there already. They knew what the story was going to be, and that's what we call front running or trading, insider trading, whatever you want to call it. That's what our math always shows. It picks up that insider trading that goes on. It picks it up, like 8.5, almost 9 times out of 10. My math will pick it up. And so you can see here, over on J4X, let's widen that out. You see J4X, same thing. On Tuesday, it closed in a green hinky. So it was picking it up also. And you can see right here our work, what we call the Manhattan indicator or system, or whatever we want to call it. It's a combination of the hinkies and hinky-ashki bars with the 2 different stochastics battling with each other. The white line is the fast stochastic. The dashed line is the slow stochastic. And you can see the pressure that gets put on it, it picks up on it too. It has a sensitivity of picking up on it. And sure enough, what do? They take them up and they release news the next day, and then at the end of the day, and then you can see here, next day here, that's yesterday, a day after the meeting, still lifting up. So they obviously knew right there what they were going to announce. And they were going to, I guess they knew it was going to be that disshuttled. Very strange. Mr. Powell looked lost at times. He didn't answer questions for 4 or 5 seconds. We call those pregnant pauses. And he'd look up and he'd go, "Oh, I'm writing down notes here." Probably like, "Hey, next time you guys release minutes, let's cut out some of the stuff, or maybe I need to read the minutes again, so I'm not saying no to yes and yes to no." And so that was probably the action there. So you can see here, we're looks like things are not exactly staying in the channel. They're playing with the outside of the channel. We'll see how well this does. You can see we have a little curve there. And at the same time on J4X, you can see the same situation with the Swiss. It's reaching the top end of its range, and you can see the white line is trying to interfere with the dashed line. So you're seeing that weakness. Let's see. From there, we jump over to the euro, right there. And you can see the euro is sitting on that 0.23 for the last 2 days, and it's been in the sell since Tuesday. Okay, and you can see we've pierced the weekly, which is a surprise to me. I really thought we were going to me, my logic was, we have a responsible Federal Reserve here in the United States, and it's going to work out how to raise rates without freaking out all the other pairs trades, since it seems like that's what it always wants to do. In other words, the idea is to keep stability. That's the key answer they always claim they want. They want to keep stability. But in this case here, obviously they don't, because Mr. Powell came out unprepared. And not only did he come out unprepared, he came out espousing the opposite of what their minutes show they discuss in meetings. So you have to really wonder, I've never really challenged his competency of. It's like a Joe Biden situation where, like, all of a sudden we're wondering, is this guy really coherent, or is he running so scared that he's going to talk whatever the socialists want until he gets sworn in? Remember, he's not sworn in yet. Mr. Biden has appointed him, but they haven't taken the vote for him yet, and he needs those leftists to support him. And at the same time, once he gets voted on and it's a yes, and he gets sworn in that day, then the question is, does he raise rates a 0.5 percentage point, like right out the chute? That's what everybody's saying. Some are saying that from his news conference, that the Federal Reserve put of protecting assets has been diminished. In other words, he's basically said, we may do that, we may not do that. We may not be so quick to, keep the equity markets so stable. We may let them float on their own a little bit. That was one thing he shook the market up with. Then the other one was he also suggested that he may raise rates meeting after meeting. Every 6 weeks, he may just raise rates for 4 or 5 meetings. And then at the same time, he always throws in the caveat, but we're going to look at the data. Supposedly that means if it hurts too much or I get too many complaints, boom, we're just going to keep on floating more fresh dollars, so that you can keep on spending those fresh dollars as a government. A little sip of tea after the first 11 minutes of the broadcast here. All right, so that's where we are. That's where the pairs trades are. And I guess you could say the best thing we could say about this week is we're real disappointed that the Federal Reserve has acted much more, I guess you have to say, irresponsible. People are calling it even worse than what I'm saying about it. There are people out there that are just ridiculing it from the top of the mountaintop. They're really saying this is not real. And how can he dare to embarrass the historic Federal Reserve by not fighting inflation? And that's what the battle's all about to begin with, is that he needs to raise rates, the world needs to raise rates, and they're dragging their feet. Alrighty, there's the cable. Did we do euro yet? No, let's do euro. Let's go to there's the euro. I guess we did put it up there. Let's put it up on J4X. You can see the euro, that is sitting on that 0.32 area, for 0.23 area right there, the blue line. And so next one is the 0 line, or the other side of the Fibonacci sequence, which we can show you. So we can do this. Yeah, there we go. As you can see, we've Fibonacci'd the channel that it's been stuck in for a long while. And you can see how it meets the different Fibonacci points and then stalls out. And here we are making, we've taken out this low of November, and now it's going down. I didn't really think we were going to see the lows after that. We were seeing higher lows. It was lifting up. It went up to the 50 percentile right there for a couple of days. We were in the weekly buy for 3 weeks, going on the 4th week when it challenged it. And then it started to roll over. I guess Mr. Powell was letting some of his friends understand where they were going, and obviously, wow. So back there, that's the 14th, and right there is when the meeting was on the 20th. That was the end of the meeting, 24th. Yeah, so the end of the meeting was on the 26th. So you can see the trend of the product. It hit that 50 percentile, and it's following the big trend now. You can see that right there, where not only did it slide down from hitting the 50 percentile, but it's just rolled over altogether, just punishing it. So they obviously had some good insight, educated guesses, as they like to say in the finance world. Educated guesses, yes, educated. Isn't that a cute way of saying insider information or speculation? So from there, we'll go over to the cable. We're seeing the same disappointment there, and they showed real responsibility. It's going to be an interesting horse race here to the end of the day, if we're going to close in that weekly sell or we're going to climb up, because it's at minus 0.007 at the moment. That's where it's at. Oh, no. It's even closer than that. It's at minus 0.0045. So we're very close for this product to climb back into its weekly. And we were really happy that they raised rates in December when the Federal Reserve was supposed to raise rates, but obviously they didn't. So a lot of things we've said over the last couple of weeks is really turning into mush. You know, in the end result, we always follow the math first. We always try to figure out what the story is. But this one's been a real surprise. The Federal Reserve is, I'm still kind of confused by that whole meeting. It was the weirdest thing ever. All right, from there we go over to the Turkish lira, one of the great new experiments we've been watching, and we're really impressed with the way the currency has really stabilized. And you can see it there. It's going to be inside that big box, I think, for a long while. We're slowly drifting into the weekly sell again for a second week. And you can see the daily buy has been kind of just going nowhere. But I mean, it's going up. There's no doubt about that. But since we're so used to such high volatility that it's really tightened up, you can see how tight the days are. And if we scroll that over, you can see really how tight the highs and lows, the distance between these highs and lows have really contracted to the point where they're really tightening up there. Over on the Euro Turkish lira, right there, same situation. You can see it, and it's even tighter. And we fell into a daily sell yesterday there. I know we put a red line in there. And let's save that. And you know, it's doing it again today, but they have come up with a wonderful idea to stabilize that currency by creating those puts. So that's a real winner there for President Erdogan. He's kind of come to the rescue finally from after moving from 1 to 18. He has come to the rescue, and you can see it's really stalled out, and that's a good thing. He's done well. I'm surprised that they were going to incorporate this back in 2019, but it didn't seem to work out. They just didn't do it. And then the desperation came in at 12, and then we were talking about 18, and then they took our number of the 18 and used that as the drop dead area, and they incorporated this strategy that they had developed back in 2018 about the idea that if it got up to a specific number, they would offer these free puts. At the time, I think it's kind of brilliant, actually. And at very first look at it, I didn't think it was going to work. But then when I read what they were planning on doing, I said, wow, that's a pretty good thing. It took about 2 or 3 days to be able to actually ferret out what their strategy was going to be. And, you know, we've been pretty impressed by it. All right, from there, let's see. So let's put it over here on J4X. There it is right there, Turkish lira. Yeah, it kind of stalled out. Look at that. You can see it when we contract it all up. It has really died down from all those wild moves, you know. Wild action. All over the place. And now we are calming down into a really nice tight range, which is very stable, you know, and very capable. That's the good thing. All right, from there, we drift over to the Canadian. Unfortunately, some of the weirdest things are going on between the Canadian and the dollar. Normally, this action up, we would assume that oil has dropped off, but I don't think we're seeing that. And let's just double check oil real quick. There's March oil. It's pretty much stable. You can see that there. So it hasn't really dropped off yet. Now, over on the Canadian itself, they've really got it all shook up. Between Mr. Biden and Mr. Trudeau, the Prime Minister there, the two of them are really enacting some really emergency actions that make no sense, but they're doing it. And you can see it's having an effect on the Canadian dollar. It's going up when it should be headed down because, I mean, oil as you see on right here, has been going up. And normally when oil goes up in value, we usually see Canadian go down and gain against the dollar. In this case here, it's losing against the dollar. All right, and from there, we take another quick look at the metals complex through J4X. Right there, there's the gold. See, same thing. Kind of a little surprise. You know, the pressure's been on it, and we do kind of shake our heads at that. But I mean, when you have all this inflation, you're kind of surprised to see. You would think that gold would go the opposite direction. So when it was trading at 1814, or in that case there, 1820, was that 1852? You would think that it's trading now at 1787. So that is 65 points. I would have thought for sure in a daily buy, in a weekly buy, I would have thought for sure this product wants to go to, 1925, something like that. Not the $65 in the down direction. And you can see here we go into the sell the next day, and it's like, uh-oh, okay, so here's a loser, no chicken dinner there for the traders. And sure enough, look at it, it drops from the $30 area, 1830, all the way down to this morning to 1778. 1778. So that's 22 points right there with another 30. That's 52-point drop since we've been in the sell. And so I was like, what? And so it's a neutral, because we're in a weekly buy still here, and we're in a daily sell from here. So basically, it's just telling you be neutral, be hedged. If you're long the contracts, then you could have sold calls against it or bought some puts against it or done anything to make your position neutral. Use the binaries and the options and all that other fun stuff. All right, so from there, due to the fact we're seeing this pressure, we're assuming that the South African rand is going to be moving up in value against the dollar, unfortunately, for them. King dollar being king dollar. Let's see how it looks. Yep, and that's what it's doing for the last couple of days, moving straight up. See that right there. Marching its way up. And it's like, what? Are you kidding me? There it is right there on the J4X, moving up comfortably. It switched over with the greens, with white line pierced, just like us right there. It went into the buy right there. Let's throw that line in there. And that's a real disappointment. We were thought when we saw this weekly sell from here up in this area here, and we were in the daily sell all, throughout that whole period there, and then we went to a buy. So let's just grab a green, I'll throw it in there, and we went into a buy right there. We thought, okay, and then it, 3 days of bouncing up, but in a weekly sell, and then we see this sell again right up in here again, and we get this whole ride back down again, another big winner chicken dinner. We're thinking, okay, yeah, this thing's going to go break the 15s, maybe challenge that low or this high over here, somewhere in this range of the 1480s area, we're thinking. But no, metals rolling over with the metals, and next thing you know, the currency is basically going the same way. All right, from there, we go over to the ruble, which is reflecting what the foreign ministry has announced, and that is it's unthinkable to attack the Ukraine at this point. They're not interested in attacking the Ukraine. They don't think there's a reason for attacking the Ukraine. So why our socialists in this country want to keep on beating those war drums? I don't know. But they do love war, I guess. And that's where we're at. We're stuck with that. So you can see the 3-day move up or 4-day move up in here has already come back down to it. Would be nice to see it get into that weekly sell. You can see they know the pressure is on the upside here, and it's tried to get into the weekly sell a couple of times and failed at it. And we'll keep an eye. So maybe next week it'll go back into the weekly sell after 2.5 months of weekly buy, and making each daily buy and pretty good buy. Like this one was big winner chicken dinner. This one was a okay chicken dinner. This one was a nice fat bird. And that one was almost a break even. And then this one was a nice big couple dinners. So, you know, we're getting some good signals out of it. We're just disappointed that this thing seems to find ways to go to the all-time high region, you know. We keep on expecting to see the ruble kind of get its game together, you know, but, you know, when you have, like I said, when we have our socialists in power here, they really try to disrupt the whole process. They're really angry at the Soviets still. They just don't understand how, you know, Ted Kennedy, some of our Democrat senators and leadership were very supportive of the Soviet Union, and they were very upset that it fell apart. So it says a lot about our Democrats. All right, from there you can see there's the ruble there showing you the same thing as our work, and you can see the white line who's topped out here. But finally, when you get that red and you get the white line still topped out and moving down, it tells you that the pressure is on the downside again. From there, we'll look at the yen. Right there. And there's the yen right there. So you can see, you know, the yen playing with 5-year all-time high area. That's what that is right there. You see we're in a weekly buy, and that was a nice win there. This one was a small little win there, and this has been a nice little win right there, going on the third day. It's still that little green right there. Put that in like that. And so we're, you know, you can see it's holding up in the buy and going towards the 5-year high at the same time. That means the dollar is getting stronger. You know, I'm really surprised. I guess somehow or another, we must not be hearing the story yet, where they're not going to raise rates around the world. Maybe that's, you know, I don't know. I don't even have a strong opinion about it. I follow the math, but I would have thought the smartest way to do things would have been to softly move up interest rates in unison with all the other countries. I mean, when they're trading at minus, what's the big deal? I mean, if they go to a quarter plus or a half a point plus when the United States is at 3, that would have kept, you know, a stability. That would have done something positive. I don't understand. I mean, that's what quantitative easing is all about, is to keep stability. But somehow or another, it seems to have drifted away from that. And instead, it's let's see how much free money we can float until we have to pay it back. And then we won't worry about it. And that seems to be the whole recipe, because, I mean, Mr. Powell couldn't even clarify his position to match what they discuss in meetings, which is really odd. All right, from there, we drift over to the last one of them all, and that is the Mexican peso. Right there. You know, we look at the Canadian border, we look at the Mexican border, the two sides of our country. And you can see it's been in a daily buy there. It wasn't in a weekly buy, so it's pretty hard to take that win out of it. The sells have been the great ones on this. You know, every time we were going to sell, like here, it was a wonderful trade, a wonderful trade, a wonderful trade. You know, 3 great, wonderful trades. And then you can see here, it gave us the heads up down here at the 2-month lows that, you know, we're seeing buying again. And obviously they're going to the top end of the old range, and we'll see if they go and challenge this up in here. I don't know what that is exactly. Are they terrified, or, you know, you know, these central bankers, if they can openly walk into a public meeting with reporters, you know, world-class economic reporters, and tell them the opposite of what they published in their own minutes and from their own meetings, then you really have a lot of people right now. I've been seeing the headlines. I've been seeing, you know, where I follow news. Really great amount of disappointment. There's a lot of confusion, a little more scaredness. And yesterday, the stock market was getting punched in the face after a lot of strength, and was minus down. And then the last 5-10 minutes of the day, like usual, you know, when you're going to dollar cost average, the buy orders came in. Actually, it was 20 minutes before the close of the day, and you know, at the quarter of point, they lifted them. What happens is that I'll explain this. This is a little exotic and what they call deep in the weeds. But if you're an institution and you put bids out on your stock that you want to buy or sell, it gets published by the ICE, New York Stock Exchange. Okay, and then what happens is that they're allowed to remove their bids or offers from 345 to 350, and what they are is they're like market orders to be executed at the close of the day, so that they get the closing price of the day. And for the 5 minutes that they've announced for, they can pull their bids or offers. But after that, the last 10 minutes, they have to stay. And so at 350, they, you know, the next move occurs, and I can see all the strength coming in those time periods. You know, they were lifting them up, and I was shaking my head, and I was like, "Are you kidding me? They're dollar cost averaging in now." Huh? I think I, as a money manager, you know, I think I would have done it hours earlier, down when it was down 300-400 points. But anyway, from there, we're done the currencies. Unless anybody here, no one's asked a question today. Everybody must be exhausted from Friday already. We'll go over to the energy sector and see what crude oil is doing again. All right, where's it at? Oh, it's down here, that's right. So we'll first look at the spot month of crude oil. Right there, trading at the 87.36 area, up for the day, but off yesterday's highs. Yesterday's highs were 88.27, as you can see right there. The day before that, the high was 87.95, so 88.27, and today's high is 87.58. So, you know, it's been off, but not off that much, and you can see it's up for the day, but we're getting a red dot. And you can see the daily is trying to roll over, but we're staying very firm in the weekly at the moment. Now, see the same thing over on you know, J4X, same situation. White line has pierced through, just like ours was. Oh, you can't see that. There it is, right there. And now our line is rolling over, and we're figuring that this will start to do the same. We've got a red dot going on here, and we expect in about 2 hours we'll probably see a red bar develop. And that's the action we're seeing at the moment there. Now let's take a look at Brent, because it broke the 90 area right there. You can see that, and that's what some of the oil traders, or one of the oil traders I know, who's been doing it for over 40 years, was saying to me that's what all the Ukraine scare is about. Is basically they just trying to push the oil up in Europe, nothing more than that. And we had that craziness happen yesterday in a few things like natural gas and all. And so you can see here our back month of June, which is discounted to the March. You see where March is trading at 87.43 as we speak. You see it right there. And when we look at the June contract, you see it's trading at 83. So it's discounted by a little under $4. So they're discounting it. They're thinking, you know, they call that the reverse, the contango. Back month is lower, front month is higher. And they look at the cost of carry and so forth. And also there's some opinion too. Maybe they feel like, you know, less use will be occurring, things like that. Maybe there's more supply, you know, that type of thing. You can see it's in a weekly buy a week longer. And as you can see here, Brent has just been very firm the same way. Like I said, it got up into the 90 area. That's what they were looking for. That's what they got. All right, now from there, we go over to natural gas. And there is U.S. natural gas. Yesterday, the February contract expired. and it went to $7. It was 7,000 contracts traded, which is a lot. So it almost doubled in price. It was a wild move from the $4 area to the $7.50 area. But you can see here, this is the March contract, more realistic, not a delivery issue. And you can see that's copper. Let's find it. Right there. There we are. There's the March contract, and you can see March contract is at 4.5. You know, the way we had it here, you can see the same thing on the J4X, and the strength that's been there, and you can see the 4 green daily bars. And you can see we've been, you know, we got 2, 5 green dots going on, and you can see we're flirting with the weekly buy now too, after 12 or 13 weeks in a sell. Right there, you can see that. Now, looking at natural gas in Europe itself. I'll find it in a second. Right there, there it is. You see it's trading in the 28-29 area, starting to bounce up again. Sorry about that, Europeans. I know that means more cost to heat and to cook and so forth. It's trading about 7.5 times more than American natural gas. Not $7 more, 7 times more. So it's trading in Europe about $28, going on $29. And here in the States, it's trading at $4.50. And it's the biggest arbitrage we've seen, one of the biggest arbitrages. We've seen as high as like $37, $38. And we've seen ours at a high of like $6.5, $7, like yesterday. You know, the February contract went exploding up to the $7 plus area. All right, that is the nat gas. What else can we talk about when it comes to the energy sector? I guess that takes care of that. Now let's go to the metals complex. We'll take a look at silver, because we've seen gold. We've been sad to see gold getting pressed down like that. And there's silver. You see the pressure has jumped on that. We went into a daily buy one day, and then it rolled right over. Real sad to see that action. You know, it looked like they were going to take it up. I thought silver was going to go. You know, I was on that conversation of we'll probably never see, you know, the high 19s again or something like that. Or if we do, it'll probably be for a couple of days, and then it'll probably turn up again. And here they go. They slam it from it being at a high of 24.75. And now we're trading at 22. We've been as low as 22.40. So that's $2.35 drop in the product. It's like, wow. What is, you know, doesn't anybody know that there's inflation? What kind of control do they have over that market? And, you know, and this is what opens the doorway to the cryptos. And what's it? There was going to be a webinar today on cryptos after our webinar. Passion is doing a webinar. What's it called? I think every Friday now he's going to do crypto. He calls it Crypto Friday. And he's calling himself FX Freedom from FX Passion. So on Fridays he does a crypto webinar, which sounds really smart to me. I like that. I'm going to try to tune in on it. I've tried to push some things out of the way because that's the last hour before the U.S. market really gets going. So I'm, you know, I'll be in there probably for a half hour at least, and I might have it on in the background. I might not be paying attention to it because of the action after that, but I will be paying attention for the first half hour. So let's see, what else can we say about that. I guess that's about it in the sense of that's the action we've been seeing here. And you can see right there this is the March silver is flirting with breaking the weekly sell now. It's like, can't this thing get going? You know, hasn't anybody told anybody that there's inflation in these funds? From there, we'll go over to copper. You see copper, same situation. We were threatening a buy. We're in a weekly buy for weeks here, you know, since this area basically. And, you know, we go up and down, we make good highs, and then we, you know, go down a little bit, gives you a chance to get in again. But you know, this was a nice win. This was sloppy. This one. This is a loss. This, you know, you make your win out of it. That's nice there. And then in this case here, same situation. We get into a buy, and it starts to roll over. Another loss. There's 1 out of 3 total. That's really sloppy action. And you can see here, you know, we're flirting with that weekly sell there. And we've been in a daily sell since this crazy action that day. And it hasn't really been that, I mean, we're lower now, but it's gone up and down. You know, there's the metals complex in general just is all over the place. You know, not making a lot of sense anymore. It really isn't. All right, yeah, especially with, you know, oh, that was another thing Mr. Powell had mentioned, and he did mention, he said, he didn't give us a number, but he did say that the inflation factor is worse than our numbers reflect right now. That's what he said. Well, if they're worse, then why aren't you raising your rates? I mean, it's like you're basically fighting historical nature of the marketplace itself. Let's see what the platinum looks like there. And there's platinum. Looks like it's holding up in its weekly buy with not much of a problem. But look at the way they're pounding it down here today. And actually, it's been in a sell since here. So it's been in a sell since here, and it hasn't been able to get into a buy. Oh, I guess this was the buy right there. And then it opened up this morning. You know, went to the high of yesterday, and then has rolled over. That's a pretty good sized move too. We haven't seen that since kind of like the beginning or the middle of the last good move up. Now we went to a daily buy here, and it never let go. It, you know, just kind of made new highs and then would fail and make more highs, and then you had this crazy pop right there. You know, it pushed it into the sell, but it just didn't really do anything. Strange gaps, strange direction. You know, for a world of inflation going on right now, it's like the metals market means nothing, which will make, you know, FX Freedom's webinar even more interesting. You know, to hear what he has to say about the cryptocurrency, what his charts tell us about it, you know, so forth and so on. Let's see, where are we at? All right, so that is the that is the end of our metals view. We've done the energy, so we're pretty much done there. And what we're going to do is we'll look at the stock indices, and we're going to look at the crypto at the same time. And here is there's the Bitcoin. We're going to look at the crypto, and you can see it's been on that downtrend since we went into the weekly sell. We're going to basically warm you up for FX's crypto conversation, and we're going to show you that the trend has been down. It's even further back, isn't it? The trend went into a weekly sell there. Let's scrunch that up a little bit more. Yeah. So it went into the weekly sell there. Had your nice little hump there. You know, and that, I don't even see it. That's not a buy. Let's move that out of the way. And that sell is back there. No, it's even further back. Right there. There's a sell. And it stayed in that sell for a while. Guess we haven't cleaned this thing up in a while. No one really asked for it. And then, let's see what happened. It went into a sell again. Go into the sell. Went into the sell there. And I guess it goes into a buy there. And then back into a sell again. Get rid of that buy. That's not there. And then it finally goes into a buy. Get rid of that sell too. I'll get rid of those like that. Remove and remove. We'll keep those two buys in case we need them. And then you can see it goes back into the sell here. Goes back into the buy next day, like so. And then it goes back into the sell there. It goes into a buy there. Goes into a sell there. Okay, so they're all up to date now. Let's remove those. So this is the January contract, which expires. I believe it expires today. And you can see there, we've been in that weekly sell now for a while. And I guess we could do this. We could try to make that bigger like that. Yeah, that's better. That helps you out to see it. So since the $70,000 area, this thing's gone all the way down to 32,000, basically 33,000. In the weekly sell, since it's been in the weekly sell since there. The buys have been okay, but you can't take them. They're very short-lived. The sells have been nice wins. This was a good sell. Took a little work to deal with, a stop order and a whole bit, but it was wonderful. It broke down nicely and stayed in the sell all the way down to here from there. This one, no, this was a loser. This one was a super duper winner. This one was maybe a break even or a small loss. This one's a super duper winner. This one was a super duper winner. And now we're going to sell again. We'll see what that does. Awful hard to believe we're going to see below 32,000, but anything's possible. These central banks have a lot of power to play a lot of games in anything they want. If they can keep gold and silver down in almost double-digit inflation, then they can do anything. And as you can see, that's November. Let's go over to, first let's go take a look at J4X with the way it's reflecting the Bitcoin. Let's see, where's it at? Where's Bitcoin? Maybe I have to put it in there. Let's see. Ooh. There we are. And the Bitcoin is BTC. Okay, so BTC. There it is. Let's see how it loads up. And it's been doing that same thing since November, going down. And lots of red. See it there, just bouncing up once. And lots of red again. And you can see it's trying to bounce off of that now. So Bitcoin's been, they're able to put pressure on that product with no problem whatsoever. There is no problem. And you go back to November, you see the same situation, just like over in here. Lots of red, more than there are green. And then, let's see. Now let's do this. Let's leave Bitcoin. Let's see, let me do this. Let's leave Bitcoin on here. And let's take a look at some of the stock indices and see what they've been doing since November also. So there's the Tech 100. The Tech 100 is the on Dukascopy. They do, you can trade it through Dukascopy. Let's go there and tighten it up a little bit. So since November, pretty much the same action. It's been at a high or an all-time high, and they rolled over. So in many ways, the great disappointment with the cryptos has been is the fact that the cryptos are following the regular market. And this is kind of a disappointment overall. And you can see here, we went into a weekly sell, I guess, at the beginning of December, and then they went sideways down, made another move up, and now they've gone back into a sell again, and the pressure is down even more. And they're taking out something like 5-month lows or 10-month lows or something like that. Let's see, yeah, they're taking out basically May lows. That's what they're going after at this point. Back in the May lows, they're going after, or I guess the May highs. So they're taking those out, and there's the May lows there. They've pierced that. That's the June lows. Okay, so it's the June month lows they're taking out at the moment. And that, again, we're really surprised that the cryptos have not been able to do this this breakaway from normality. That's the thing. That's the big thing, is that we were all hoping that the cryptos would be independent of the stock market or the the bond market or something like that, but instead they seem to be matching up very well to the same action we're seeing there. Then let's take a look at, and this is the most interest sensitive of the three major stock indices, without a doubt. And so that makes sense. It's matching up really well to the crypto. Then we go over to the S&P 500, and you can see there we've made an all-time high. I think no more than like a week, like I guess at the end of December. So let's scrunch that up. You can see there in November we went into a sell with that topping out of the crypto, and we did the sideways action, but then it bounced, went up and did a buy for a couple of weeks, and now it's back into the sell again for a second week. You know, it still has that flavor of the crypto, just nowhere near as identical, but still the same trend, just weaker. Then here's the Dow Jones Industrial Average, same situation again. You know, these are the three major U.S. indices, and we're not seeing that breakaway. There's the November top. There it is there in Bitcoin, you know, in the cryptos. And it goes on for a while, but it bounces up like it does here. But in this case here, it brings it right back up to those numbers, then brings it back down with a higher low right there. Goes into a weekly buy for a couple weeks. And I guess that's those couple weeks right there on the cryptos. And then it rolls over again into a weekly sell again, and you can see the pressure that's put on it. So just nothing more than cryptos are not independent enough to really feel like you want to be involved in them any more than just treat it like an asset class. That's the way I've been saying that for a long while. You know, I believe in the new asset class. I have no problem with it being a new asset class. It's fine. You know, it makes sense to me. It's the blockchain technology. It's moving capital. But I don't see it as like something I want to park money in unless I'm hedging it, like any other investment. It's an investment tool. It's an investment itself. It's an equity. You know, it's an asset. But it is not some type of stable. I mean, we've seen it lose what 50% of its value in a matter of a couple months. So that's not stability. That is definitely not stability. And that's something that needs to be reminded to a lot of people who think, like we've seen a lot of popular people, you know, football players and mayors of cities and so forth, taking their pay in the Bitcoin and Coinbase and so forth. And we're not seeing the what's the word I'm looking for? We're not seeing the stability. They've lost a lot of money. If they'd just taken it in dollars, they would have been fine. They could go and sell calls, buy puts. If they're going to take it in cryptos, they need to use the options and the binaries the same way. You get long crypto, you better have a put that protects you. You can sell a call way up, do it for free. It's called a collar. And just sit back and it stabilizes your position. But, you know, to take 50% asset risk in just a matter of a 2-month period, no, definitely not. It's not a stable product whatsoever when it comes to its independence from the Dow Jones Industrial Average or the dollar or, you know, in many ways, you know, we could go and look at that. Let's take a look at that on Chicago Quant. We'll leave, again, Bitcoin up on J4X. And I'm opening up Coinbase, the exchange that trades these cryptos. We'll show you what the stock has been doing. And there's Coinbase right there. And let's take a look at the November numbers. You can see there's your November highs. Not all-time highs, but pretty close to it. The best move since in November, just the same way. Let's scrunch that up. The same way Bitcoin did, and it went from $350, $360, almost $370 a share to $167. So from $370. So that lost 60-some odd percent of its value. And that's like, wow, that's not doing us any favors, you know. So people who are taking their pay in this stuff need to think twice about hedging it, because it's like taking your pay in Dow Jones Industrial Average ETFs or Spider ETFs or FTSE ETFs. It's like you're taking your pay in stock. And I don't know if there's a tax opportunity for it, but let's take a look at the dollar itself over that same time period. We're going to scrunch it up. We'll show you the dollar index. And you can see to some extent, here it is right there. You can see in some extent, here's November, right there. It went into the went into a sell in let's see, where's it at? Right there. So it went into the buy in late September. And here's that November area here. And you can see the dollar goes roaring up against the Bitcoin and the Coinbase and all like that, sideways, little digestion, goes back into a weekly sell right there. Let's move that over. So it goes back into the weekly sell right there. So now they're both on the same page, moving down. And then you can see it goes, let's widen this out a little bit more for that. And then you can see it goes back into the buy right there. There's the daily buy a week and a half ago. So it's at 1, 2, 3, 4, 5, 6, 2 weeks back. It goes into a daily buy, almost 2.5 weeks back. And so you can see there, and then, it goes into a sell that one day right there, and then back into the daily buy again. So we're just trying to show you the reality to it, the physical reality. And that is that if you're going to take these things as an alternative to the dollar, wow. I guess you can say it is an alternative to the dollar. That's the closest thing. But now look at it. It's at its highs, and Bitcoin is at its, where's it at? Right there on J4X there. It's at its lows. And that's not, you know, that's the risque, you know, truly risque. All right, traders, we'll give you a few minutes to see if you want to ask about anything. No one's asked anything today. It's been really quiet. So FX is going to be doing an hour long, starting in about a half hour, of cryptos. He calls it, let's see if we can put it up there. Let's see, is it right there? Yeah, there. Right there, right there, and there it is right there. Crypto, oh, you can't see that. Let's get that up there. Right there. FX is, freedom is going to be, that's passion. We call him FX Passion on Skype, but he's changed his name to FX Freedom. And he's going to be doing an interesting look at the cryptos. He's going to be doing this every Friday. So we'll see if we can help him out a little bit by just, you know, we just gave you a good run. I don't think we're going to go through that deeply again. But we do know one thing for sure, and that is that we've shown you that it's really working. The cryptos are kind of working in opposite of the dollar. And you can see there, you know, it's at its highs where the cryptos over on, you know, J4X are at its lows. You know, so you can see that it's doing that type of thing. I'm not totally convinced the cryptos are a currency, but out of all the things we've looked at, the stock indices and the currencies, obviously it is one of the, you know, more consistent pattern of opposition to it. And obviously, you know, I guess you could put gold up there and silver looking the same way. Not really working away from that, but working towards that trend. So, in other words, metals are not working with the dollar; they're working against the dollar. And we'll see how that all plays out in the end. Sometimes it goes nowhere. You can see that right here on the dollar index. You know, it pretty much sells off and just goes sideways for a month and a half. Does a little digestion, and then boom, up they go. So, all right, traders, we are out of here. Everybody have a safe and smart weekend, and we will catch you all on Monday, TGIM. Thank goodness it'll be Monday. Happy trails to you until we meet again. Monday. Happy trails to you, to all our trading friends. Later, traders.